Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Wednesday. We have had quite a silent week in terms of the economic calendar. We didn't have any major economic announcements. But then from today, we will be looking at the CPI or US inflation data, and it's the most anticipated news for the week. So there is a lot to cover today. Hopefully everyone is fine. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hello, Isaac. Thank you. Thank you for joining the session. So when it comes to what's currently happening in the markets, I want us to, first of all, get an overview of what's happening. So on one hand, we know that the Fed, or the Federal Reserve Bank of the US, has been hiking interest rates in order to control the rising inflation. And it has been doing consecutive interest rate hikes since the March of last year. So we have gone a full cycle, that is more than 1 year, where the Fed is hiking interest rates on every sitting. And with all these hiking of interest rates, they have been observing the CPI data as a major indicator of how the economy is responding until they achieve their mandate of stable prices, or at least an inflation rate of about 2%. So far, we have seen this inflation drop. So if I show you this chart here, then it will be easy for everyone to understand. So inflation was on the rise. This was in both 2021 and 2022. So it kept going up until it peaked here in July. So since then, we have had consecutive months where inflation has been going down, with the most recent drop moving from around 6% to 5.0%. So in the last Fed meeting, the Fed went for a 25 basis point hike, which increased interest rates from 5% to 5.25%. And this is expected to be along with the policy of quantitative tightening, which would eventually push inflation further back downwards. So now everyone is looking at the inflation data, the month of April, to see whether there is further stabilization of prices. So if indeed we see a further drop in these prices, then the Fed may consider at least maybe holding interest rates there so that they observe the economy further to see if inflation eventually gets to 2% target. So one of the challenges that the Fed is facing right now is that the rapid rise in interest rates for a period of 1 year has begun causing cracks within the US economy. And we have already seen several US banks collapse as a result of the high interest rates, especially the ones that did not have healthy books, or the ones that had overexposure with held to maturity bonds, as well as commercial real estate. So in this case, what we are observing is investors anticipating to see the movement of these inflation rates, and then they try and front-run the decision of the Fed. So if, for instance, inflation remains at 5% or even spikes higher, then it means that the Fed has a little bit more work to do in order to push the inflation back to 2%. So in that case, we'll be expecting another 25 basis point hike on the next meeting, and that is expected to be very positive for the US dollar, but negative for US equities. So on the other hand, if inflation drops as projected, maybe below 5%, then investors will be betting that the Fed will be holding rates. That could be weakness in the dollar and strength in US equities. So that's the general perception or expectation for the US CPI data. So it will be coming up at 3:30 p.m. later in the day. So the CPI month over month, we're expecting a 0.4% rise. So also there will be a focus on core CPI. That is the consumer price index without food and energy prices. It's basically a more stable measure of general prices when you remove the volatile prices of food and energy. So Once we get these, then we'll have some increased volatility in the markets. So I expect all USD pairs to have increased volatility. Also, I expect to see higher volatility in gold as well as oil and US equity indices. So later on in the day at 7 p.m., we'll be having the SNB chairman Jordan issue a speech. So this might also cause some volatility in Swiss franc pairs. And also we'll be looking at the federal budget balance at 9 p.m. So the most important news for the day will be the CPI at 3:30 p.m. So that being mentioned, I think it's time now we look at the chart, try to understand some key concepts. So one thing that we analyzed yesterday is that we had a very nice flag here on the UK 100 or the FTSE. We had a nice break. The market kept going down. Then the market pulled back, then sideways, and now there seems to be some further momentum towards the downside. So for intraday trading, there is a certain levels that are quite important. One is yesterday's low, which might be a very short-term target for anyone who is trading the FTSE. And also, there is these last week's low, which seems like an interesting target if price keeps this momentum going. So for the US dollar index, we saw strength on Monday, yesterday strength, but some later weakness towards the end of the day. But then today, in the last 4 or 5 hours, we have seen the dollar index continue with this strength. And this is an indication that the market is betting that we will be seeing some high inflation. So as long as the dollar index keeps strengthening, then it basically means that some of these other currencies keep retracing. So we saw the pound USD drop all the way down to 1.258 yesterday. It was a major support level. Remember, at this point, it was resistance. Now, after it was broken, it became support. But then, from the last couple of candlesticks, you can see some rejection of higher prices. And potentially, we could be seeing the pound USD trading further downwards, maybe retesting yesterday's low. And that is 1.258. So for New Zealand USD, it's a similar case. Some very nice retracement, pulls back. Notice that the high is lower than the previous one. And perhaps we'll be seeing some further downside. Maybe our earlier target for yesterday, 0.631, will eventually be hit. For Euro USD, we had a nice break. Look at the forward chart. We have a rising wedge from the two trend lines here. And the market broke the area before retesting. So this was the breaking point, went all the way down to this support area here that you are targeting, 1.09420. After it got to this area, bounced, and then today opened with a gap, went all the way up, retested the area. Then from the price action that we are seeing on the last two candlesticks. So remember, we are trading the London Open right now. So in this case, we are expecting some further downside in Euro USD, having a confirmed break, a retest, and now the market seems to be going down. So as long as the dollar remains strong for the CPI, then we could be seeing some further downside momentum in Euro USD. Very short-term target remains at yesterday's low. And if you go to the forward chart and you look at the potential lows, then you can see there is this area, which was previously a support, 1.091. And also, we could be observing some further downside if there's high momentum at around 1.083. So, as for USD CAD, we had a very strong bounce here on Monday. On Tuesday, the market kept going up. Remember, our target was 1.341. Pulled back towards the evening yesterday, and now you can see there is a continued momentum. So perhaps we'll eventually achieve our target of 1.341 later in the day. So as we all know, it was a major support level here. So that's the basis for drawing the trend line here. So this was a major support level. It was also a major resistance here. So you tend to see these levels repeating themselves. So if the market is on the upswing, then this remains a nice target. So as for USDN, the theme remains the same. The market is homing some horn. A horn is where the two trend lines are diverging away from each other. Sometimes it may be described as a loudspeaker, but all the same, it implies the same concept. So the number of swings seems to be getting bigger and bigger. And now you've just moved from an upswing and potentially going back downwards to another downswing. However, from the last swing that we had here yesterday, seems that there is more price action closer to the upper swing, so potentially trade towards the lower swing on the lower side. So as for gold, after having a bounce here, this happened on Friday last week. Then you can see on Monday, there was continued pressure to push prices even higher. Then on Tuesday, we achieved our target and a key price level of 2031. So yesterday, I mentioned that 2031 is a key price level for gold. If you go to the forward chart, you'll notice that it was a major resistance level here. And now gold has been attempting to break this area unsuccessfully. So what we are seeing here is gold breaking, staying up for a while, moving back down. And now I estimate that there is a good chance that by the time you get to the CPI data, gold will be trading at around the same point. So now the idea is, if the news happen to be very positive for the dollar, then the gold price could drop this support level that we saw last week of $2,000 per ounce. However, if it happens to weaken the dollar, then you could see another rally in gold. The short-term target at around 2048. So 2048 was the other high here, this end here. So it's very important to observe these price levels because they represent some very nice targets. So it's all about being patient and waiting for the news, then to have a clear direction. So for AUD-USD, this is what's happening. So some nice peak on Monday. Tuesday, the market keeps going down. And now, today being Wednesday, we can already see that this particular pattern has already been broken. The market is already moving in the opposite direction. So it was a nice triangle, and now the market is showing a very strong breakout. So perhaps this seems like the most convincing play for the day, where we are seeing a previous projection where we're expecting price to drop all the way down to a level of 0.67109, taking time to materialize, but all the more it seems like it's going to materialize now. So it's a play basically betting on a very strong dollar against the Australian dollar. So if this plays out, then short-term target 0.6737 and also 0.671 as an extended target. So as we all know, this is not investment advice, neither is it a recommendation to trade. So you should always do your own due diligence. So we had an extended flag here on the S&P 500. And in the last two candlesticks, you can see that we are now having a break. So this is an indication that there is a good opportunity towards the lower side. So if it plays out, then we might have to find a target on the lower side, maybe a full swing all the way down. This could be very interesting. So there is a good chance we could be seeing a high risk reward trade on the lower side after this breakout. So the market made a very strong move or a very strong leg, stayed for 3 days in this flag formation, and now having broken to the lower side, then there's a good chance you could be seeing the price drop all the way back. And it's the same case. There's a very strong correlation with the NASDAQ, which is also dropping after rejecting this particular resistance. So maybe target of the lower side or the bottom or the basis of the pattern. So we could be seeing some continued weakness in US equities. And also for the Dow, after rejecting this resistance, we can see the market going down. And today it's attempting to go down even further. So a very short-term target was this tail here. And if the market gets to 33,431, then another potential target at 33,289. So as for Brent oil, we had a very nice play yesterday. The market trading within the flag, forming a false break, and then reversing immediately, bouncing off the $75.4, which is a level that we had identified as a major resistance. So from here, it made a very strong bounce and rallied all the way up to the other resistance, which was the previous day's high, 77.393. But then upon hitting that level, you can see now it's swinging back down. So the expectation is that it swings all the way, the previous low here of 75.4, and this seems to be playing out quite well. So on the contrary, if this doesn't happen, then the retest is, of course, the previous high of 77.393. So as for the Euro 50 or the Euro stocks, what we are seeing here is a market that traded in a triangle, made a very nice breakout yesterday, pulled back to a resistance level. You can all see this area here. So I'll try and highlight for you. So there was this area here that was acting as resistance. So after breaking out, went all the way down, pulled back, retested the area, and it's now dropping down further. So if you go to the 1 hour chart and then you zoom your charts, you notice that we are having a consistent theme, also a very nice trend line here that was once broken, now seems to be playing out as expected. So perhaps this is a continuation of the downside momentum in the Euro stock index. So there is an expectation that we could be seeing some lower prices. We already tested today's low. So if we break this low, then perhaps we'll be seeing some further downside. So I think we already covered New Zealand USD. So that's the highlights for the day. Let me check if you guys have any questions. So as for forex performance, just be showing you a quick highlight here. So we know that month to date, the beginning of the week, US dollar was the strongest. Was the weakest against other currencies. But then we are seeing the euro now against the dollar, while other currencies remain stronger than the dollar. That is month to date performance. So from this data, what we are seeing is earlier in the morning, we saw ECB's Nagel basically saying that we have gone for a bigger rate increase last week. The fact that the ECB went for a 25 basis point rate hike basically means that they are too slow to address the strong inflation, which currently stands at 7%. And that's a challenge that the market is questioning openly by basically shorting European equity indices. So that's one of the takes in the markets. So as for the daily, if you look at the performance over the dollar against other currencies over the last 24 hours, then you can see that there's a very little change, 0.02, 0.02, 0.5, 0.06, with the biggest shift being the Australian dollar with negative 0.13. So it basically implies that the dollar is matching up. It's much stronger than before. It was actually losing against all these other currencies. So for instance, if you look at the weekly chart, then you'll notice that the dollar has outperformed the pound, the Canadian dollar, the JPY, and the euro, with New Zealand, Australia, and Swiss franc all being positive. But then when you look at the month-to-date performance, then all of these were very strong against the dollar. So this basically means that the dollar is making a very quick, strong recovery, and it's something that you need to be concerned about, especially when you are looking to execute your trades. So the dollar index was on a very sharp fall, met a major support level. If you go to the 4-hour chart, there's quite a number of times it has been holding here. And having held here, you can see it's trading within this particular triangle. And currently we are on an upswing on the week. So we started on the lower side of the trend line, and now we are moving towards the upper side of the trend line. So there's still some more upside, the dollar index. And if this kind of trend continues for the day, then we might be looking for positions where we buy the dollar and short other weaker currencies. So now that we know that, it's time to look at the questions that you guys have. Awesome. Hello, J School. Hello, Anthony. Hello, Alpha, Charles, and Tony. So, first question here. Good morning, Rodney. How do you trade a speaker pattern as printed in USD card? The speaker pattern tends to give bigger swings, but eventually the market is unable to form bigger swings. So eventually you'll find that the market break towards one direction. So where is that? I don't think the speaker pattern was on USD card. I think it was somewhere else. Yeah, it's on USD JPY. So eventually, the market will not be able to form these consistent swings. So you basically trade it the same way you trade a flag, wait for a breakout, then participate in that. But also, you can trade in between. For instance, if you are tracking these, then this would have been a nice entry for a short selling position, targeting the lower side of the loudspeaker. Hi, Rufas, comment on the statement. When the market trumps good news and reacts on bad news, shows bearishness. This has been the case for DXY versus Euro. If true, do you expect further weakness on the DXY? Yes, on the long run, let's say on the quarter, I expect some further weakness on the DXY. But then, if you compare the two central banks, the ECB and the Fed, I think the Fed is showing a stronger commitment to fighting inflation, which is very positive for the dollar. So the fact that the Fed has reiterated time and time again that they are not going to stop, that they are going to keep hiking interest rates until inflation gets to 2%, is something to be concerned about. I think in the last meeting by the ECB, they repeated 3 times that they're not going to stop hiking interest rates. I think they're trying to copy what the Fed has been doing and the pace at which it has achieved lower inflation. But then, high inflation is still a big, big problem in Europe. And unless the ECB starts going for stronger rate hikes, then there will be higher bets on the dollar compared to the euro. So USD JPY for our chart has consistently obeyed the upper trend line. What's puzzling me is continuously print longer upper wicks. What is your contemplation on that? Of course, obviously, there is a higher volatility and also potential for JPY changing its monetary policy. But as for now, what we know is that the monetary policy is still really weak in Japan. So we are still on an upswing. So if you look at the longer term pattern here, of them hitting this particular resistance and putting back downwards, I think the one thing to be concerned about is the lower trend line here. This is the value area. So the US is tightening policy. Japan is still printing more cash. So in this case, any pullback towards this lower trend line might be a very nice play. But for short-term intraday trading, you could consider shorting. But the real value area is along this trend line. So if the market happens to drop along this trend line, then it might make sense to look for conference. So another good question here, what is the probable price action of a rising wedge? In a descending trend as printed in 4 Euro USD as at 10:12 a.m. This is a rising wedge in a descending trend. I think it's always a case of wait and see. So eventually, I expect some drop, maybe later today. But then the best way to approach this is to trade what you see. So don't trade what you think. Don't trade what you think the pattern will do. Just observe the price action and trade what the opportunity in the market is presenting to you. So thank you very much, guys. Unfortunately, my time is up. This was supposed to be 10 minutes. It's already 24 minutes. I hope to see you guys on the next session. So remember, today we have a new episode of the Bullish Banter podcast. We'll be sharing these on all our social media channels. And also personally, I'll be sharing on the Telegram group. So if you're available, just take some time and listen in. I think the topic that we are covering today is the US banking crisis with respect to First Republic Bank, which perhaps the weekend that was a week ago.